Good morning, everyone. Just getting situated over here before we start class. But we should have our presentation going. My audio should be working. Looks like webcam is on. And it's only going to be on for the beginning because it can get a little bit distracting. So I will turn off in just a second. I just wanted to have it on while we get kind of introduced. And let me turn off the background sounds that I have. Okay, perfect. So before we actually jump into what's on our agenda for today, I do kind of want to just go through a little brief introduction and then kind of go back to the QuickBooksTraining.com website to talk about your VIP features. So a little bit introduction to myself. So my name is Erica Otero. I am going to be your instructor for today. I do have a background in corporate instructing as well as adult learning for the past about 5 or 6 years. So here at Real World Training, I do help design some of the training courses that you see on your on-demand courses, as well as some of the VIP webinars that I'm going to show you in just a second that have been previously recorded classes that I've cut up and posted to the website for you to actually take the class bit by bit. And then there's actually a way to get some certification documents after you complete it. And I'll show you that in just a second. But I also do teach a lot of the Monday QBO webinars. We did have to reschedule for today, but typically these will be on Monday, and I'll show you the schedule as well. Kind of talking about how this class works and how your VIP benefits work overall. So this is one of the weekly live webinars that is one of the benefits of being a Diamond VIP member. So I will show you the schedule in a second, but I do have all of the classes for both online and desktop posted that are going to be taking place for the rest of the year for this month and then finally December. We'll have January's class posted probably about mid-December. I'll get those posted maybe sooner, so you can kind of take a look at what's going to be coming for the beginning of the year. So as a Diamond VIP member, you do have access to all of these weekly live webinars. You do also have access to all of our self-paced classes. So that is for both versions, online and desktop, level 1, level 2, the accounting classes. And so that is, of course, included in your VIP bundle. And as well, we do have the Ask an Expert option, which I'm going to show you in just a second in case there's any of you that have not taken advantage of that option with any questions that you have. But you will be able to join a live Zoom room with one of our or two of our instructors there, constantly staffed, waiting to answer your questions, where you can actually even share your screen and take your mic off if you'd like to discuss your question, or just use the chat function within the Zoom room where you can still see them. And so I'm going to show you, I'm going to drag over the website here just to kind of show you where everything is at. So of course, once you log in, make sure you can see that. Looks like you can, perfect. So once you get logged into your training, this is going to be your landing page. Now, of course, this is going to be an online class, so we are covering online concepts. And so it takes a second. Let's let that load up. Well, when you log in, it's going to look like this. So this is your landing page as far as where you can find your on-demand courses. So all of your Mastering Online Level 1 and even your Pro Premier, if you're looking for desktop, is going to be right here under your on-demand courses. So all of them are listed. Now the VIP webinars I was mentioning just a second ago, for those of you guys who would like to have some certifications on specific topics, or even like to take a course on a particular industry that we have had webinars on, that's what these VIP webinar courses are. Now they are still courses, and the cool thing about these is you can actually take these webinars bit by bit, as opposed to having to watch the full hour and a half course from start to end. So they're in little broken up sections. But when you complete this course and all of the videos have been viewed, you can actually receive and print off a certificate of completion for that particular topic. So it would say that you have completed a course for the top 10, QuickBooks tips and tricks for online. So if that's something that you're looking for in order to stand out in the industry, or to show that your boss that, yes, I have a good understanding of this particular concept, that's what those are there for. And there are plenty of them, and we continue to add more that will come soon. Law firms should be having access. I will double check on that one for you. But yeah, those are your on-demand. As far as the live classes, to view your schedule, especially how we got to today. This is the upcoming classes for online. So I'll be teaching the customizing QuickBooks for online on Monday. And then we'll have some more for the rest of the month. And then a year-end tasks for online will be taught next month. And you can switch if you wanted to view some of the desktop classes. There is the desktop schedule as well that is posted. Now, as far as your Ask an Instructor, this right here is going to be super helpful. One of my favorite benefits that you get as a VIP member is the ability to actually get some live real-time support or answers to your questions. So using an Ask an Expert option here, you would just select join the Q&A, and what this is going to do, and I'll actually even show you, they'll probably know that I'm joining to show you, but as soon as you click join Q&A, you're going to be launched right into the Zoom room. And so there will always be an instructor staffed in there, if not two, in case there's a busy time, to actually hop in and answer your question. So you'll be able to share your screen if you wanted to have QBO open and ready to go and have some notes as to where you have some confusion or some headache. And they'll be able to actually take a look at it and guide you through to let you know, what is your answer. So I'm going to join it, and I'm going to be muted automatically, but I just want to show you what it looks like. So you'll join.
They were just like, oh, well, so I did an investigation.
And this is what it's going to look like. So you'll join the room, you'll wait, there'll always be a member staffed in there. They will unmute you, you'll be able to share your screen, and then of course discuss your question with them. So that is something I would highly recommend taking advantage of, and it is part of your monthly live services as a VIP member. And so we'll come back to that in a little bit. But that's a little bit about how this class works and your benefits overall. So I have already been talking, so I hope you're good to go on the training interface. If you can't hear me, this will kind of take care of that, but I do recommend that you at least listen through the audio from your computer. But if for some reason, as I'm going through a QBO or anything like that, and my audio drops off, you can just select to switch to the phone call option, which will let you actually dial in from your cell phone and then listen to the audio that way as I take you through my training account that we have for QBO. Then you can, I don't have any handouts for today's class in particular, but you can also type in some questions if something pops up along the way, but we should be good from there. As far as what is going to be on our agenda for today, let's kind of talk about what we're going to be discussing. So this is the purchasing, workarounds, and shortcuts class. I do have the time slated until 12 Central Time. Whether we take all the way up until the 12 time or not will depend on how fast or slow I talk. So we may not, need the full hour and a half, but we do have that. So we're going to be talking about lines of credit. So we're going to be talking about how to actually set up whenever you receive loans, or let's say you open up a new credit card and you have a new line of credit that you have to actually maintain payments on, or anytime you actually use, that credit card, how to take care of those expenses. We're also going to talk about employee and owner purchases. So what to do if the owner invests some money into the business, whether they want to have that paid back or whether it's something that, is just going to be an investment, as well as what to do if an employee actually makes a purchase for the business, using their own funds, or they had to, just cover something on their own. You have to reimburse them. We'll talk about employee reimbursements. We're also going to talk about vendor deposits. So sometimes you do have to make a prepayment for service or for a purchase, and they have you put down a certain amount. We're going to talk about how to record that to keep track of the different deposits that you have, because you can have a number of deposits with different vendors. So we'll talk about how to actually manage it. We're actually not going to cover support schedules. I forgot to take that out of there. That's not going to be in the scope of today's class, but we will cover vendor refunds as well. Towards the end, we're going to talk about how to actually bring in the money that you spent with that vendor, and then what to do if they give you a refund, whether it was a deposit refund, or if it was just, you didn't have to pay off that last of the balance. We'll talk about refunds as well. So before we jump in, I am going to just turn off my webcam here so that we can get rocking and rolling here. So give me one quick second to switch around here. Alrighty, I'm just getting my account here. Okay, and for today, I am going to be using the online test drive. Now, this is something that you guys actually do have the ability to use because it is just there for you to actually go in and pretty much break and mess around with QuickBooks Online without actually affecting your real books or anything. You can just search, I believe, QuickBooks test drive. And I believe it should come up if you want. Yes, so if you just Google search QuickBooks Test Drive, it's going to be the first link that pops up. And that's exactly what I'm going to be using. It'll allow you to just go in and use a QuickBooks account without having to actually, I hate these things, have to actually, don't watch me like mess up this capture. Let me fix it. But if you needed to actually go in and practice something, you can go into the test drive as opposed to having to use your real life books and mess everything up. It is having me do so many of these just to verify I am not a robot. Okay, there we go. Now I can unpause. But yeah, so if you wanted to get in and break stuff, so I'm going to be using this so I can go in and just kind of play around with what I want to show you. But we're going to be talking about your lines of credit. So to do this, we're going to first start off by going to the chart of accounts. So let's briefly talk about how the accounts are laid out. So we do talk about this a lot as far as the way it's laid out in terms of the different types. So your chart of accounts essentially is going to be the hub of all of your accounting here. It's going to house all of the accounts that you use to categorize your transactions. Now, of course, the way that it's laid out here, you're going to see your asset accounts, your liability accounts, and some equity accounts, and these are going to have balances over here. So all of these accounts actually come from your balance sheet. So this is going to be accounts that are going to be things that you owe and things that you own. So that's what these accounts are telling you about. So everything you owe is either going to be a liability, which we have right here. They're either going to be a liability, which is money that is owed to people outside of the business, whether that is a credit card, a loan, maybe even a bill that you owe money on, or it's going to be an equity account, which is money that is owed to the owner. So these are going to be the first accounts that we're going to be working with when we start talking about your lines of credit, because again, this is money that we have borrowed. So if this is money that we have borrowed from outside of the company, then that of course is going to be a loan. But when you borrow money from the owner of the business, that is going to be what equity is. And so of course, this is those top sections. Now the bottom half of your chart of accounts is going to be your income, cost of goods sold, and expenses. Those are going to be more of your accounts that deal with your profit and loss and actually show your day-to-day performance, as opposed to a track record of the different transactions that have been accounted for in these top accounts here. So whenever you take out a loan or receive a new line of credit, it's a good idea to actually set up a liability account for it. You know, even if there is going to be loan forgiveness later on, you still are going to have to record the loan in QuickBooks and then of course treat it, you know, as if it's a, you know, loan that you're not going to get money back on. In the meantime, again, we're mirroring what's happening in the real world. So we're going to talk about how to actually set up this liability account, as well as how to make payments towards the loan. So the first thing, of course, you're going to want to do is you're going to want to add this type of liability account to your chart of accounts. And to do that, you're just going to, of course, going to come to your chart of accounts and then select new. So after you select new, of course, the bank or the account type here is very crucial to make sure that you are properly tracking this type of transaction. So this right here is going to be a liability account, but you may be wondering, is it going to be an other current liability, or is this going to be a long-term liability? So to kind of help you out there, your long-term liability is going to be something that you're having to pay off for over 12 months. So 12 plus months, that could be something like a mortgage, would be something that's a long-term liability. You are liable for that money borrowed for a long period of time. Your other current asset is something that's going to be paid off typically within that same year. So I'm going to use other current liabilities, but of course select the account type that works for what your type of loan is. Now, when it comes to your detail type, it's not quite as important as the account type. You just want to pick something that works the best. So in this situation, because I am setting up a new line of credit for a loan or something to that nature, you of course would select the line of credit as the detail type. Now you can name this whatever it is that you need. You know, I can enter this in as line of credit from, you know, blank account, you know, like if I'll put, you know, the bank, if I got a loan from Bank of America, if I got a Chase loan, something like that, I could enter in your line of credit, credit card, whatever the actual title is, I'll leave it that way. If you have already been paying off, and of course you can enter in a description, but when it comes to this balance down at the bottom, if you've already been paying off this loan, I mean, you could enter in the balance right here, you know, and then from what day do you need to begin tracking that and then enter in a balance. But personally, I feel it's better to not do this if the loan was actually taken out in the current year, because you're going to want to actually enter in the real transactions in which you borrowed that money. So you're going to want to enter in the actual transactions in which you borrowed the money. You know, that's kind of my personal, you could, you know, if it was something from the previous year that you're entering in, you could actually go and find a statement from previous to the year and as of January 1st, what was the balance, and then begin entering in the transactions from there. That could be helpful. You know, if you've been paying off a loan, you know, for 5 years, for example, and you don't want to have to go back and enter in 5 years worth of transactions, of course, definitely in that situation, use the balance and just find a statement to enter that in there. But if it's something that happened within the same year, I personally recommend to actually enter in all the individual transactions that have been related to that particular loan. And then so I'm just going to begin tracking this one as of today. I'm not going to include an actual balance just for our example, but that is how you would get that account onto your chart of accounts. So if I scroll down a little bit, we should see now we have a line of a credit, other current liability account. We have the title and it is showing $0. So let's say now we need to record the money that was then borrowed. So this is setting up the liability account in order to categorize transactions, but I have to actually, you know, get the transaction recorded from the amount that we borrowed. So a lot of you guys, and I'm going to mainly stick with going directly to the banking center because a lot of people are using online banking as opposed to manually entering, which of course you could manually enter in this transaction, but you know, I'm going to find a transaction here. I kind of want to save that Books by Bessie. Oh, I have 2 of them. So money received. Let's see. I'm going to pick this one. We want to pick a money received transaction. So here, I would just open it up and let's say this was the transaction that came downloaded that was the money borrowed. So just let's pretend that in this situation. What I'm going to want to do is I'm going to want to categorize this transaction using that loan liability account that I just set up. QuickBooks is going to say that this is going to be income, you know, money received. They're going to think this is something related to a sale. But of course, as we know it, this is money invested into beginning our business or a loan for whatever reason. This is not income from a sale. So uncategorized income is not going to be the best category. We want to categorize this using that loan liability account that we just set up. So I would then come into this category here and enter in the line of credit category. And then the vendor is going to be the bank that we paid or that we received the loan from. So once we get that actual money, they need to be set up as a vendor, not a customer. And then you can hit save because that's money that's going to be received them. They were a vendor. We borrowed money from them. This is the transaction that we got into our bank when the money hit. And so from there, all I have to do is just hit add. And so I could come back over to my chart of accounts. And you see my line of credit account now has $55 accounting for that. You could, again, manually enter this for the money that was borrowed. This could quite simply just be recorded as a bank deposit as well if you don't utilize online banking, or if it's just easier for you to do it this way, whatever it is your preference. I personally, you know, say most people lean towards going with the online banking, but of course, you would just come into here. And then down here, as far as the bank deposit goes, you would use that line of credit account and then enter in the amount, you know, for whatever the amount was, and then, you know, save anew from there. And that's how you would just record. So you're basically trying to record and categorize in, you know, money received. And then of course the vendor in this situation would be going towards the bank. So you could manually record that there. So that's pretty simple in terms of how to record or how to set up your liability account and then how to record the actual money being deposited into your bank. Now you can then use that bank deposit. I'm sorry, you can see here that once you come back to the chart of accounts and after you either use that bank deposit or add in the transaction from your banking center, you're going to see that your bank account balance is going to increase as well as that line of account or line of credit account. So this one increases as well as the bank account. So QuickBooks is going to be double, accounting in that sense where your checking account goes up to account for the money you receive from the loan, while you do have this liability account that is showing you how much money is coming from that or vendor, I would say, how much money you borrowed from that vendor. Now, let's say we need to actually then pay off the line of credit. So now it's time, we got the money from the business, it's time to make a payment on that particular loan. So this will be done by using an expense. Now this has a little bit of a tricky, side to it in terms of it not being as straightforward of a transaction, but it's nothing you can't handle because all you have to do is come into your new menu and select expense. And so we're going to be paying off the line of credit. So what you'll do as the payee is we're going to actually let me go into my banking because I'll show you a banking transaction before I show you the manual transaction. So give me 1 second to switch around how I want to do this. To the bank. Okay, perfect. Yeah, so I'll show you both ways. So if I'm in the banking center, let's say I got the transaction, let me get another transaction for money received. So let's say this right here. I think I can just probably use this 55. Yeah, I'm just going to use this one. So let's say this right here then was a payment towards the line of credit. I need to actually pay off the loan that I got. So I can come into here. Now this transaction, I'm going to have to do a little bit of different work to it. So I'm actually going to split the transaction. So the reason why we're splitting is that we need to include the interest rate on our loan here. So I will split this account, that way we can have, or split this transaction, that way we can enter in multiple accounts to break up that amount. So I'll enter in, and the payee is going to be the bank that I borrowed the money from as the vendor. Now my first category line is going to be the line of credit liability account. So that was the $55 that I borrowed there. In the second category line, I'm actually going to choose my interest expense account that I have set up to actually account for the interest on the, actually I want to do, let me add, I don't want to do interest earned. I want to do interest. So I'm going to add an interest expense account to my profit and loss report to actually track any expense accrued on my loans, because as soon as I get my loan, the interest is not going to start accumulating right away. It's going to happen later on. So I'm ready to include that on my payment. I'm actually going to change this type. It's not a bank type account. This is actually an expense account. And so I'm actually going to categorize this as an other expense. So expenses or other expense is totally fine to use for an interest expense account. I just want to have my interest expense taken out into the bottom of my profit and loss report, because when I enter in this as other expense, the full amount is still going to leave our bank account when I record this transaction. But when I pull a profit and loss report, I'll actually be able to see my interest expense account as an other expense towards the bottom. And I'll show you exactly what I mean in just a second. But I'm going to add this other expense account. And now as far as the detail type here, again, and just pick something that's going to be working. I can pick any kind of loan. Let me see which one. I have interest. Let's see, vehicle loan interest, whatever is going to work there. And then I'm going to hit save and close. So I'm going to add that. So this way I can actually show the part of it was for interest and part was a line of credit. And so I'm going to enter in the amount here. Let's say $55 was the line of credit. And then we had, $10 worth of interest. Of course, enter in exactly what you're needing here. Oops. I can't do math today. And there we go. And so of course you can still from here enter in an attachment, enter in a memo, whatever you need in order to complete the transaction. And then when I hit apply and accept, I come back over here. Let's go to my reports here. Actually, I'm going to go to my chart of accounts. So let me actually, before I show you the report, let me show you the balances that changed on the chart of accounts. So you'll see that my checking balance would have changed as well as my line of credit. So now when I go to my line of credit account, you see that it only shows $10. And so that was for the $45 that went towards my loan. And then you'll see my balance there. Now, if I go pull my profit and loss report, let's just do profit and loss. Now, when I come down here to the bottom of my profit and loss report, I actually do have another expense account for my interest expense right here, calculating that $10. And so I would just keep using that account and using my interest expense until my loan is paid off. Of course, enter in the amount towards the loan and the amount towards interest that work best for your situation. Just want to show you kind of how the accounts work with all of these transaction types. So you could, again, also record this thing rather than going into banking and splitting the transaction that way. If that's a little complicated or you do not utilize online banking, you could, of course, record this as an expense. You would come into here, same thing we just did, enter in the bank as the vendor. Here would be where you would enter in the liability account, the line of credit, and then here's where you would enter in your interest expense. And so then again, of course, allocating your amounts there and all of that, save and close, that is perfectly okay. You either go to the new menu or you go through online banking. Now, the one thing you don't want to do is some people are tempted to get bills involved here. Now, I would highly recommend against bills when it comes to loan payments, because this is a little bit different. So bills are not used or not intended to track an ongoing balance that gets updated after you make partial payments. Like a bill is going to be, I use Wi-Fi every month. Every month I know my bill is going to be $200 for the package that I have. That's not an actual, giant balance of $5,000 that I borrowed from, AT&T and that I'm having to pay down on. No, use bills for things like that, like things that keep the light on, your utilities, all of that good stuff. But, use an expense or online banking or a check. If this is something that is a loan payment with interest, you're going to want to make sure that you have that properly recorded there. And so that's how you'll take care of recording or setting up your chart of accounts to open up a line of credit. Again, that could be whether it is from a losing my mind, to your credit card or a loan, because remember I said those top accounts are in regards to your balance sheet report. So those are going to be things that you own, which is your assets, versus things that you owe. So everything that you owe either to people outside or inside the company is down here on your liabilities and equity. So that's why that account that you're adding to that chart of accounts to take care of those lines of credit or loans is considered a liability. It's still money that is owed to someone else, even though you've borrowed it. So that's why that would be considered a liability, while your assets are things that you own. So speaking of things that you own, let's talk about owner purchases and how to reimburse the owner, because we're going to have to set up a couple of different additional accounts to take care of that. Now, when it comes to creating your owner equity accounts, let's talk about what equity even is. So equity is where you would see the value of the business increase in the eyes of the owner. So that is money that is, reflecting either contributions from the owner, money that the owner has withdrawn out, investments into the company. So depending on what exactly the owner is expecting in terms of reimbursement would determine which type of account you're actually going to add and actually use on those particular transactions. So I'm already in my chart of accounts here. Let's add a couple of these owner equity type accounts and talk about how these transactions are going to look when your owner is spending money and investing in the business. So I'm going to come into here. And so the first account we're going to add, of course, come back into new, is going to be as far as the account type, an equity account. So this is dealing with our owners. Now, of course, the detail type isn't as important, but I'm typically going to use the owner's equity, a detail type. Of course, if you're entering a balance, opening there, you can enter in that stock. Of course, pick what's closest to you to describe what that account is. The main important section there is going to be the type to help determine where that information is going to be tracked. Now, this is where you would enter in, one of two names. So let's say the owner does not want to be paid back from the investment that they put in the business. Then I could title an account here to have on my chart of accounts, owner's investment into, let me move my mouse there, into the business. And so again, same thing with here. I'm not really going to have a balance here, so I am just going to choose to add that. Now that's if the owner does not expect to get paid back on the money that they put into the business. Now let's say they do, they want to have, their money paid back as soon as possible. You also would have an account called the owner's temporary, if I can spell today, which I cannot, bear with me, temporary loan to business. And so this is to be an account type that you would use if your owner does want to get reimbursed back for the money that they put in. It's something that's temporary. They want their money back as soon as possible. Have one or both of these accounts. They are helpful to have on your chart of accounts in general for any business, because that way that happens all the time. Owners can make purchases on accident, on purpose. They have to pay themselves, a number of different things. So you would want to have either one of those accounts. Again, they work in the same way, but it is helpful to keep amounts that the owner doesn't expect to be paid back separate from amounts that they do expect to be paid back. So if the owner then does deposit money into the business's bank account, then all you really have to do is just categorize that transaction using one of those accounts. And they're going to show right here, just using one of those accounts, you can categorize that transaction. So if I wanted to, I can come over here back into my banking center. Let's say this was money received. Let me pick something here. We have this payment. I might save that for an employee, but it doesn't really matter. I have this payment right here. I'm actually going to categorize it. I'm just using these transactions that are in this test drive to kind of practice, but I would actually come into here. And so I'm going to categorize this using that equity account. And then as far as the vendor, it's actually going to be the owner's name. So you would enter in, of course, what their name actually is. And this is going to be a vendor. This is money that we're sending. It's an expense. Actually, this is money. Yeah, same thing. It's not money spent. It is not an expense. It's money received. This is money that the owner has put into the business. Excuse my language. But you'll put the owner's name there. And then as far as the category, now if the owner wants to get reimbursed for the money, then you'll put temporary loan to business. If the owner does not want to be reimbursed, and of course that's going to be your investment into the business. So if let's see, I want to put temporary loan to the business, so they want to get paid back, and I hit add, what that's going to do is it's going to increase my checking account balance by that amount, and it's also going to increase that owner's equity account to account for the money that the owner has put into the business. Double accounting, it's beautiful. So that's where that would go. So if you needed to record it, again, if they were going to let that money go and that's just money into the business, you would then use that one exactly the same way, just use the other account. Now, let's say that we need to pay back the owner then. So now I have this money in my, if this crazy stuff will go away, in my temporary loan to business, I have $50 in there, and my owner wants to get paid back, for that. Now, when it comes to these type of expenses, they're, very similar to what we just did with the loan, except it's not going to have interest. So this one's just going to be a single line. You're not going to have to actually split that transaction. So as far as money spent, let's say, I have to pay back the owner for some money that they borrowed. I'm going to use this one, categorizing. In this situation, again, I'm going to use the the owner's name here as my vendor. And then in this situation, we're going to use that same exact equity account. So I'm going to use my owner's temporary loan to business, and then we'll just say the amount is whatever. So when I add this transaction here, what it's going to do is it's going to lower that equity account. So let me actually see, do I have a $50 line, or do I want to just manually record? So I could do that. So I'm going to manually record to actually get that balance out of there. So this is going to be us paying back the owner. The owner is going to be the name, and then the account is going to be the owner's temporary. I believe that amount was $50. I can change it if I need to go back. But what this is going to do is it's going to lower my checking account by this amount. And when I save and close, let's go back. So that was money out of my checking. So that lowers my checking account balance, but it also is going to lower the amount that was in my temporary loan to business. So that then takes off money that the owner borrowed, and it takes out money from our checking account to account for the money exchanging hands there. And that's pretty much it. It's very simple. You know, like I said, just like when you're paying off a loan that you borrowed, except you don't have to include interest on that particular transaction. So there is another scenario that could be a little bit trickier in terms of owner purchases. So let's say your owner made a purchase for the business, but that was with their personal bank account. You know, they use their debit card to actually make the purchase. So if the owner purchases something for the business with their personal bank account, that transaction is actually not going to get downloaded into QuickBooks. So you're going to have to manually record this transaction, but it's actually going to be recorded as a $0 expense. And so let's talk about what I mean by that. So I'm going to come up here into the new menu and select expense. So again, we are recording when the owner makes a business purchase with their personal bank account. So I'm going to do the same thing I've done before. And as far as my vendor, I'm going to actually be entering in the vendor that the owner paid. So for example, this could be Home Depot, Lowe's, Walmart, wherever your products are purchased. So if they bought a piece of equipment for the business using their card, like, oh, I saw it on sale, we're going to use this now. So we have to categorize that. Happens all the time. Owners just go crazy. So what we need to do then is to include the vendor as the payee. So in this case, I'm going to use Tim Phillip Masonry as my vendor. This is somebody I have on my vendors list. Now, as far as my categories, my checking account is good. As far as the category, here's where I'm going to choose the expense account that tracks what was actually purchased. So let's say I went and I bought some materials. Let's say I'm going to use decks and patios. Let me write that down before I forget, because if I use the wrong account on the next transaction, I'm going to mess it up. So deck and patios, so that I can properly record the next one. So that's for Tim. Awesome. And so that's where I'm going to use this account, and that's where I'm going to write in, you know, the amount that was purchased. So let's say I use my materials, and do I not have amounts on there? Actually, let me do this. You can do one of two things. So you can either enter it in if it was an expense account that you want to enter here, or if it was an actual product or service that was purchased, you can even enter it in down there. If it was inventory items, so your inventory items are going to be on your item details, while your category details could be used if, you know, you were using a fuel expense account, or they purchased, I'm trying to think of some other things I have on my expense account, a number of things, but I'm actually going to use this to set up for a item or service. So I'm going to put my materials, or am I crazy? I think I'm just having a case of the Tuesdays. I can't use Monday as an excuse. So let's just put my amount at $500. I think that's going to keep it the easiest. And then so in my description here, I can enter in, you know, something that would summarize the purchase that I made. So of course, that's going to be my $500 that I spent on my materials here. Now, on my second category line here, so this is going to be another one of those crazy ones that we have two lines for. So this right here is where I'm going to use the equity account as a negative. So if the owner does want to be paid back for the purchase that they made with their personal card, then I'm going to use the owner's investment into business. So if they want to get reimbursed, it's going to be the investment into business. If they don't want to be, they want to be paid back, it's temporary. If they don't want to be paid back, then it's an investment into business. So if it's as soon as possible payment back, of course, use your temporary. If they are good with the purchase, they don't want the money back, use investment. But the main thing to note here, let's see, I'm probably going to choose investment into business since I use the other one. Now, the key thing to note here, remember I said this is going to be a $0 transaction. So I'm actually going to enter in the $500 as a negative. an investment into the business there. So all I have to do there is to hit save and close. And so that is how you are going to properly set the credits and the debits for this particular trick. Now, it's kind of confusing to explain debits and credits. If you have any experience in accounting, you know that they are some complex concepts to grasp. One means left, one means right. But basically what this is doing is, if I were to go back to my chart of accounts, let me refresh here just to make sure that everything's all up to date. I can see on my equity account the amount that the owner paid. So this is actually showing as a positive $500 because it's a liability account or an equity account. And then I can also go and pull a profit and loss report. This is my balance sheet. Let me go back. I can pull now a profit and loss report to show you. Let's locate the materials. So here we see that the materials on the account just show $500. Now, this is an investment, so if I wanted to actually pay the owner back, then I would use the exact same process as previous to locate. I'd either locate the owner's expense here that downloaded into the banking center and updated the expense transaction from the owner's equity account that we needed to use, or again, I can record this from the new menu as an expense and then use the owner equity account to categorize it from there. So you're going to make that a two category transaction with a negative amount. Again, the appropriate account for the equity needs to have the negative there. Let me make sure that everything was all set on that transaction expense. Yes. Everything looks good. Perfect. So that's how to take care of owner purchases. As far as employee purchases, so let's say the employee had to buy something on their own with their own personal funds. So it is the easiest thing when it comes to employee purchases. It's the easiest way to reimburse them is going to be doing this outside of payroll. I would recommend either writing a check from the new menu or using a third-party software like Expensify, or there's some other ones that you can use for expenses. But I would recommend using one of those options. You're less likely to run into tedious payroll issues, and I'll elaborate on that. But all you would have to do is, of course, if you're using online banking, is to locate that particular transaction. And whenever you're categorizing it, you're going to enter in the employee's name as John Johnson as the vendor. So the employee's name, make sure that they are set up as an employee. And then for the category, you're going to use the appropriate expense account or the cost of goods sold account to categorize the money that they spent. So that could be, something like office supplies. And then of course, entering in the amount that way, because here you can also enter in an attachment to link to the receipt that they purchased, that they used to purchase. And so I can add that one. And that'll take care of categorizing that transaction. It'll go onto my, I don't have my profit and loss open, but it'll go to my profit and loss report. All I'm trying to do is categorize the expense and tell QuickBooks where the money came from and where the money was going to. And so I could also come up here again, either categorizing it there, or I can even come up into the new menu and write a check. So this is where I can enter in the information. Same thing, the employee would be the payee here. I would enter in the employee. As far as the category, again, this would be whatever they purchased and then the amount from there. And then this way, if I print off the check, I can even have that selected to print it off, to give to the employee, to mail off to them. Or if I did print it, I can enter in the check number to keep track of everything, of all my handwritten checks. And so you could do it that way. That's going to be the easiest ways, in my opinion, to take care of reimbursing employees that make business purchases with their funds, because you could, in payroll, you do have the ability. Let me see if I wanted to add employee. Not right now. Nah, I don't think I want to turn it on. You could, whenever you're setting up their pay, I think I can even just show you on an older or an already set up employee. Oops, let me go to. I'm having a brain fart. I'm trying to show you. Oh, duh. Hello, under payroll. I'm literally on the page. But what I wanted to show you was that you can, whenever you're actually setting up an employee, you could actually go in and set up a special pay type as reimbursement. So if I were to go through like the whole payment, the whole payroll process, I could essentially add in a reimbursement field and add that reimbursement, but that gets pretty tedious because then you're going to have to go in and actually set up accounts for every type of reimbursement that they could receive and so on and so forth. And that gets pretty messy. So the easiest way for employee purchases is going to be either with locating the transaction from your banking and just categorizing it, or going up to the new menu and writing them a check. That's going to be what I recommend for that. So we just have one more topic to talk about, and that's going to be, or we have like two more topics. So the next thing I want to talk about is going to be vendor deposits. And so you deal with this a lot. You know, some vendors do require a down payment on things, you know, or a prepayment towards a purchase. So when we're talking about prepayments, you know, that's actually something that we still own, you know, in terms of the balance sheet accounts that we were talking about earlier with our assets, liabilities, and equity. So, you know, we're talking about things that we own, but, you know, just because it was given to a third party, it doesn't mean that we still don't own that deposit. So it was given to a third party, but it hasn't been used towards the purchase yet. So it's actually still going to be considered an asset, those vendor deposits, because it's still ours. So for example, let's say for my company at Real World Training, you know, before the world has changed to where we are now, they were constantly sending trainers on the road. They were having trainers travel to different states to host QuickBooks Online and desktop classes. And that all requires a conference room at the hotel in order to have these guests come and join our classes. So in order for us to reserve that conference room, we essentially would have to put down a deposit on that, you know, hotel booking. And so just because we placed that deposit didn't mean that, you know, that money was gone forever. So when the pandemic hit and we ended up canceling all of our in-person classes for the foreseeable future, we actually were able to go back and, you know, go to the hotels and actually collect those deposits back. So we got all that money back that we spent on deposits. And that's pretty common. A lot of times the deposit is, of course, going to go towards the overall purchase, but, you know, in the meantime, the deposit that you made on it is still technically yours. So we are going to categorize that as an asset account. Your prepayments are not going to be a liability or equity. So we're going to need to add this type of account to our chart of accounts first so that we can start using it to categorize. So I'm going to come over here to my new menu on my chart of accounts. And this type of account in this situation is actually going to be an other current asset account type. So where am I at? Other current asset account type. And as far as my details up, so I need something to use for my prepaid expenses or my prepaid deposits. So I'm going to use prepaid expenses as the detail type here. So, you know, this account could be called prepaid expenses. That is totally fine to use as the account name. I'm going to change it though. I like deposits to vendor better. I need very layman's terms for my brain. So I'm going to include deposits to vendor. Now, of course, I can enter in description and same thing with the balance. I don't want a balance on there. You know, of course, there's going to be a number of deposits that go into this. I would highly recommend that you actually enter in the transactions. Do not set up the balance on this type of account, just like the other ones. In more cases than not, I'm going to tell you to enter in the transactions unless you're setting up like a bank account. Now, that you're not going to have to go back 20,000 years and enter in that. So that's how we'll set up this account, and that'll give me a deposits to vendor asset account to record my deposits. So I'm going to go into my banking center here and let's mess around with the transaction to show you what it looks like here. So I'm going to locate this Hicks hardware transactions here. So here, I open this up. I'm going to actually categorize it. This is actually a money spent transaction. This is money leaving my bank account to put a deposit on whatever it is I'm depositing, whatever I'm purchasing. So here's where I would use Hicks Hardware as one of my vendor. Now my category on this particular money out is going to be that asset account that I just set up? No, deposit to vendor. It's going to be that asset account that I just set up because I need to tell QuickBooks why this money was spent and this money was used to put a deposit onto something. So I want to keep these all separate in a separate account because once I actually complete the purchase, I'm going to show you how to then use this deposit amount here. So once I hit add and I add that particular transaction, I can go back to my chart of accounts. And what we're going to see is in, where is it? My deposits to vendor. You see that 228.75. So that has increased my deposits to vendor balance there. And then Hicks Hardware is going to have the transaction showing that the money went to them as an expense. So I can actually find them as a vendor and that'll be there. You could also write a check for the deposit as well if you don't use online banking. I could come over here to write checks. My vendor is going to be the payee, so that would be Hicks Hardware. And of course, the description would be what I was putting the deposit on. And then for my category here, it's going to be the other current asset account that you created. So in my case, it's going to be that deposits to vendor account. And then I can enter in the amount from there. So that is one way to do it. You can do it from your online banking, or you can do it from the new menu. So let's say now time passes, I made that purchase, and now I need to actually record the final expense. And so I need to account for the deposit and account for the full total here. So what I'm going to do with this one, same vendor that I just chose, and that one was Hicks Hardware. I'm going to come up here to the new menu. Now I'm ready to record the entire purchase. I'm going to select expense. My vendor here is going to be Hicks Hardware. Now, my description, of course, here can include, oh, that's interesting. It's already here. I don't know if I want this. I'm pretty sure I do. The description is going to be what includes the deposit. So this right here, so let me actually take, this is not what I want just yet. So I can actually go through it step by step. It's already entered from my previous one. So my first line is going to be the expense account that is the purchase is tied to. So if I paid $1,000 deposit on something, then I'll, on the $3,000 bill, I'm going to show you how to enter that in. But let's say I purchased, I'm trying to think of something I want to buy. Let's say, I'm going to say materials again. That works for me. So let's use decks and patios. And let me write, that was what I was trying to write down earlier, was decks and patios, not for Tim. And so there, of course, I'd enter in a description for what the purchase was. And let's say the amount that I purchased, let's say I bought 3. Do I even want to do it here? I think I want to use an item. I'm trying to figure, let me mess with this for 1 second and pause so I can just figure out how I want to best work this to give you the best example. Let's see. Okay, I think the rock fountain one's gonna work the best. Okay, so I'm gonna take this off, and I'm actually gonna use this as, item details. So let's say, this was for something on my products and services list. I can come into here and let's say I bought something, I bought inventory, and the amount is for $375 overall. So I bought, 3 rock fountains from my Hicks Hardware vendor. Now, remember though, we paid a deposit on that. So we paid part of that whenever we downloaded that transaction. So what I'm going to need to bring in here is going to be that other current asset account that we used to set up. And in my case, it was that deposits to vendor here. So I'm going to enter in the deposits to vendor as my category. And then here's where I'm going to actually enter in that amount as a negative. So I believe it was negative 228.75. If I mess it up, I will correct it. But what you see here is that we are accounting for the amount that was deposited, as well as recording the full amount that went towards the purchase. That way our overall amount is not going to be more than what we actually spent. So we're actually going to consider that deposit. So when I hit save and close, and that expense has been recorded, let me do a quick little refresh here. And what you're going to see is now that that expense has been recorded for the full amount. And here you're going to see deposits to vendor is now showing $0. So that'll move that deposit money out of that deposits to vendor account there. And so that'll take care of that. So again, like let's say you paid, you know, $3,000 and you put $1,000 towards the purchase. In your first category, you would enter in the expense that the purchase is tied to. In the amount column, you're going to enter in the total for the purchase. So you'd enter in $3,000 in that example. The second line is going to be the other current asset account that we set up, which is going to be, in my case, the deposits to vendor account. And then I'm going to enter in the amount that was a deposit as a negative. So of course, if I paid $3,000, then, you know, my negative here is going to be negative $1,000 to bring down what I actually paid after that. And that's quite simply all you have to do. That's going to take care of accounting for the deposit initially that you set up, because that money is still yours. You could still get that money back. And that is the whole reason why you want to have a separate account for that, or an asset account, and why it wouldn't be a liability or equity. It is still your money until you make that purchase. So now that we've made that purchase, it's out of that account and accounted for in the proper expense account. Everything will be included there. So let's say I needed to add multiple. So I do want to show you how to add multiple deposits. So I'm gonna show you how to do vendor refunds in a second. So if you had multiple deposits in that account, I'm just gonna grab a couple of these. Let's see. We're just gonna, I'm gonna use, yeah, this is fine. I'm gonna put that in the deposits. I'm just adding some money spent into those deposit accounts. So that's fine. Deposits to vendor. And let me get one more in there. Let's see. Who else? Let me get one of these squeaky cleans in there as well. Deposits to vendor. Perfect. So I want to show you how to do group deposits, or how to actually pull reports to see. Let's say you have a lot of different deposits recorded. Let's say over time, where'd it go? I'm crazy. So let's say you have a bunch of deposits in here. You know, you're like, oh, I don't know who's what, where it goes to where. I've recorded all the transactions. There is actually a way on here to pull a report. So we're going to call this, excuse me, a quick report. But if you wanted to actually see all the different vendors that you have deposits out on, you can actually come into here, and the view register will actually open up this account and let you view all the transactions. But you can actually hit this little action drop down, hit run report. And what this is going to give you is going to give you a quick report here of your different transactions that have been recorded to your deposits to vendor account here. And so you'll see here right now, oh my goodness, trying to code. You'll see here that you have $2,094.99 in this account here as far as deposits that you've put out. So you spent about $2,000 on deposits. So if you want to actually be able to see which vendors, now you could just kind of figure it out here with the name, but I have multiples that's going on here. I can, on this report, you see where this says group by, I can come into here right now, it's group by account. I can change this to be grouped by the vendor. And so when I hit run report, now you're going to see these transactions broken up by the actual vendor. So you're going to see here that we have $2,000 from the insurance agency, which is actually pretty normal to put a deposit on insurance and then, you know, get that back. So that's money that was spent there. And then same thing with the PAM. So you see here all the different deposits. This way you can come in, you can make your recordings for the different amounts that went towards those vendors. And so this report's going to help you. Now, if you want to be able to pull this report a lot quicker and not have to go in here and make those adjustments, you can set the settings that you like up here under report periods. You can pick the time frame that you like and then the date. And then here, this is as of today, or 90 days ago. Yeah, that's the last, that's 9 days from this, pulling from this date. Now you can group by vendors and then hit run report for the time frame that you're wanting. Then you can come over here and hit save customization. You can title this to be deposits to vendor report. And then from there, you can either group it, but then once you hit save, whenever you're on your reports page, your report center, under your custom reports, you can then just come in here and pull this report if need be. if it wants to open. There, oh, helps if I click the hyperlink, user error. But yeah, so that way you can come into here and you can just pull this report for the time frame that you're needing. If you need it custom or to a particular date, you can do that there. And so that is how you'll take care of group or multiple deposits into your bank, or from your bank to vendors, excuse me. Now, the last thing I want to talk about is going to be vendor refunds. So let's talk about when your vendors actually give you money back. Now, this could be a refund on your deposit. Let's say you ultimately changed your mind and you didn't want that item or service anymore. Or it could be money that you're owed back for whatever reason. It could be cash back, you know, a little thing that they were running, a number of different reasons why. So this is going to be what we call a contra expense, and I'll explain what that means if that means nothing to you. But, you know, we're going to be adding in, let me add in actually some transactions here. So I have, let's see here, $1,200 transaction for A1 rental. I'm actually going to add A1 rental as a vendor. And then my category is not going to be deposits to vendor. This was actually an equipment purchase. So this is nothing related to any kind of deposit or loan. I just purchased some equipment. And notice how that automatically changes that one. And so you could, of course, still enter in your customer projects, which you can do this on any of your transactions, by the way, from the banking center, like your employee transaction. If you had to make something billable or relatable to a customer, then you could do that here too. So I'm going to add that $1,200 one, and then I'm also going to add this one. So this has everything I need. Let's also add this $800 one. And I'm going to set up a rule because I want that to apply to all my transactions that meet those particular conditions. Now, as far as your refund goes, so here we have a $200 money received transaction. So this is from the same, you know, bank detail, and it's, you know, trying to pull in some details here, and it's pulling it in as a deposit refund. So this is actually money received. Those two other transactions were actually money spent. So if I am going to be recording this, I need to actually be able to show these accounts. I'm going to come into here and categorize this the exact same way because the money needs to go back into the same account that it came out of. So this is, again, not going to be income. Again, QuickBooks is going to think money received more times than not is actually income. This is not money from a sale. This is money back in a refund, essentially. So I'm going to enter in the same exact account that I recorded where the money came out from. So this is going to be equipment rental, and then I'm going to hit add. So when I go over to now, I need to go over to my profit and loss report. Let me refresh. On my chart of accounts in here, what you're going to see is if I go into that equipment rental account here, so let's see, so I have my equipment rental account, I can pull the same report that I pulled earlier. And in here, you're actually going to see the different transactions that we just added. So in here, you're going to see the $800 that I added and the $1,200 that I added. That was money that was spent. That's an expense, so that's positive. Now the money that I received back as a refund is negative $200 because it's bringing down my total by $200. So you see here it was at $112, and then I spent $800, so it brought my expense balance to $912. I got $200 back, so it brought it down to $712, and then I spent $1,200, and so that brought it back to the $1912, and that's how you get your total there. If you're recording a refund on a deposit, like that, you want to categorize it again. Make sure you're categorizing it with the same asset account that the money would have been, you know, for the deposits too. So if this essentially started off as a deposit to vendor, I would choose the same asset account. So that would be when I'm recording that $200 refund, it's going to be the deposits to vendor to bring that balance down, which you can enter that manually up here as well from the new menu. If you need to record the, oops, not an expense, the deposit, if you need to do it that way, you would just put the account to be deposits to vendors to bring the balance down. So yeah, so like I said, if you did it that way, it would be deposits to vendor, and then the amount. So, and that amount, I believe, was $200. So it'd be $200, because what that's going to do is it's going to put the $200 back into the I keep losing my words here at the end. The deposits to vendor account. I I've been talking for an hour straight, but that is essentially what I had on the agenda to show you today. We've talked about a number of things. We talked about your line of credit. We talked about how to enter your loans, how to pay back your owners, how to reimburse your employees, a number of different topics here. Now, I don't see any questions in the question section. If you have anything on your mind, let me know. But to kind of recap once again, you do have some classes up and coming. Now we do have Thanksgiving, but that's not going to affect our schedule coming up, because we do have the customizing QuickBooks class on Monday if you wanted to register for that. Oh, that's desktop. Online. We have the customizing QuickBooks online class on Monday if you wanted to register for that one. I believe I will be teaching that one at 10:30 this coming Monday if you want to come back and join me again. I thank you guys for joining me today. I'll leave it open for another minute or two if you have questions. But again, be sure if you have any questions between now and then, anything crazy pops up, I know the end of year is coming. Don't forget about your Ask an Instructor section here. Today it's open until 5:30 Central Time, and it will be open tomorrow as well, same time. But we will have the live Q&A closed Thursday and Friday for the holiday. So happy Thanksgiving to everyone. Have a great and safe holiday. Enjoy the rest of your week, and happy QuickBooksing.